Hi, everybody. I'm Bob Marone for Westchester Talk Radio, and once again, we are with our friends at Hightower, Westchester. The title of today's program is Insurance Planning and the Importance of Reviews. And we are joined this afternoon with Roman Chosick, Managing Director and Partner at Hightower, Westchester, and Eric Wilson, Managing Director and Partner from Nucleus Advisors, which is part of Hightower. And all I can say is welcome, gentlemen. This is going to be interesting. Roman and Eric work together to help clients solve various needs when it comes to insurance planning. Today, we will be discussing various types of insurance reviews, such as life insurance for individuals and business owners, long-term care, and a general overview of disability insurance. Eric will dig deeper into the importance of reviewing your insurance policies along with the process. Let's start with you, Roman. Can you tell us how you incorporate insurance into your practice?
Sure. Hey, Bob. Thank you. And Eric, great to have you on here. Appreciate you taking part in this. So for us, as I know, we've done many of these calls. For our practice, it's about being holistic as a whole. We focus on really families. We look at foundations and endowment work. And we also work with a lot of businesses and business owners to help them in their financial planning needs. We start and end with financial planning to ultimately create customized solutions for our clients. Integrating insurance has been an important part of the overall process to protect families and also business and business owners. But at the same time, it's having the right team in place to help in the overall process, to help execute the strategy that is an important piece of the overall puzzle. Working with Eric and Nucleus, it affords us that where we can solve many of the various different insurance needs. And with Eric's experience, we can create customized solutions that fit their overall needs.
Eric, tell us a bit about your practice and how you work with the Hightower Westchester team.
Yeah, absolutely. And thank you for having me.
It's a pleasure, sir.
I've been in risk management for over 18 years now, and we are independent advisors. I think when it comes to certainly financial planning and investments, but also insurance, being independent really gives you the ability to help a client and help identify maybe pitfalls in their financial plan and be able to find carriers and products that could help shore up that financial plan if an unforeseen event was to happen.
Roman, what are the types of insurances that you focus on?
Yeah, so for our practice, insurance is broad in nature. When we do a client or a prospect review, it's important to really dig deeper, as Eric alluded to, as far as looking at not only their assets, but more importantly, their liabilities. And solving for those liabilities is an important part of the process. So we look at all various types of insurance, being whole life, universal life, being that is permanent. And then we obviously look at term. We look at long-term care and also disability, which is an important part. And then for the business owners, we look at buy-sell agreements. But it's an important piece to make sure that they have not only insurance, but the right insurance and making sure it's reviewed on a constant basis.
Eric, can you give us the high-level differences in term and permanent policies and along when we should use them?
Yeah, absolutely. I think the easiest way to think about it is that term insurance is renting your insurance, meaning there's an expiration date, and permanent is owning your insurance. It's an asset that you own and you will have for the rest of your life. Both types of insurances work. There's not one that's correct or one that is better than the other. It's based on what are we solving for and how are we going to utilize the insurance. So that will come down to the client's specific situation and as their advisor, helping them identify what that need is. And then the type of product that's used, or in some cases products, will be identified specifically to help address what we're looking to accomplish.
You mentioned earlier universal life as opposed to term and whole life. Can you explain that, add a little bit to that?
Okay, so yeah, permanent insurance comes in a couple different flavors. Most people identify or know the term whole life. Whole life is a type of permanent insurance, but permanent means that there is not an end date like term. It is in perpetuity, is intended to be in place for the rest of your life. Universal life has a different methodology in terms of how your cash value builds, what sort of interest you earn, or how the policy internally operates. So not to get too complicated, but both universal life and whole life are permanent types of insurance.
Thank you. Now, like any insurance, it's important to always review it based on various life events. Can you tell us what these events are and why policy reviews are important?
Yeah, so family events are important, right? Maybe marriage, birth of a child. It could be a divorce. Maybe it's, an increase in income that we now need to change the amount of insurance that we need to protect the family, or you've taken on additional debt with a mortgage. Maybe there's estate planning for individuals with high net worth. It could also be part of business planning. If you have, let's say, one or multiple business owners to protect the business and protect each other, or if you're a important person or the sole, let's say breadwinner to that business, having insurance in place, again, to protect that business in case something was to happen.
How does a life insurance policy review generally work, and how do you get started? Perhaps you could walk us through that process.
Yeah, absolutely. So a review is exactly what it sounds like. We're reviewing something that a client has bought, right? Term insurance, permanent insurance, disability, long-term care. They've bought insurance maybe a few years ago or maybe many years ago. And things within their life has changed. Some of the things that we just mentioned, right? Family events, business events, net worth, liabilities. And so having, number one, to look at the existing insurance to see if it still meets their financial needs is important. Second is that a lot of changes have taken place in the insurance industry. There might be opportunities to save a client money. There might be an opportunity, if they have a term policy, to extend the term period without costing them any more money. So there's a lot of things that, because of the changes in the industry, that might be beneficial financially for the client, for us to at least take a look to see if there's something that we should think about making a change. Again, whether it's a reason within their financial plan, things that have changed within their life, or just because the product offering now might be financially better suited for where they are currently.
How about when you review long-term care and disability policies? Does that process look very different?
No, it's similar in terms of, again, collecting data and then evaluating that data. Again, seeing if that fits within their plan. If we take disability, for example, disability is replacement of income. So from the time you purchase that policy, have you changed jobs? Or has your income increased substantially with the amount of disability that you have taken out maybe no longer meets the financial obligation? And so, having the ability maybe to increase that amount of disability. And the same with long-term care. Long-term care, the industry has made dramatic changes over the last 10 or 12 years. A lot of carriers are no longer in the business. Costs have gone up. And there's other products that have now been introduced. So again, it's just seeing if the policy that they have still works for what their needs are, or if there is something that's maybe better suited for where they are today.
What about just some real life examples? Can you share them with us where someone didn't get the kind of insurance perhaps that they needed because they didn't review their policies?
Yeah, we've had clients, they weren't clients, but we've got brought in after the fact where something as simple as a beneficiary wasn't changed. And so, somebody who should not have received that money received the money. And, a lawsuit penned because of that. But the insurance company had this is specifically the beneficiary that was originally listed, and because nobody ever reviewed it, it was never updated to reflect the correct, beneficiaries. We've had people who have borrowed money or stopped paying premium. Again, when I say we, meaning things that we've reviewed where we helped, put a client in a better position, but where clients thought that their policies were paid up, and come to find out many, many years later that their policies were not paid up, and that loans from the cash value accumulated to the point where they either had to put in a lot more money or they were going to lose the policy. The policy was going to lapse, which was actually going to create a big taxable event to them. So again, these are things in terms of just doing, and it's what we'll call a simple insurance review, can help identify potential issues in the future.
Eric, as Roman had mentioned, they do a lot of work with business owners. When you review such things as buy-sell agreements, does the process look any different?
So in terms of the process, right, if we're underwriting for whether it's life insurance or disability, the underwriting is primarily the same, other than we're now looking at the financials of the company versus just the individual. As well as how are we going to structure these policies. There's things called buy-sell agreements, right? Partners have buy-sells. What happens if something happens to one another? What's the mechanism? And part of those buy-sell agreements, a lot of time, are what happens in case of death. How do we buy out the other individual's spouse or estate? And what's the mechanism to do that? And utilizing insurance could be an important piece to provide liquidity, right? And that's what we're looking to do, provide liquidity to the business. So the business doesn't have to come up with the money or take a loan to borrow, to pay off what they're obligated to do so. So again, underwriting is primarily the same other than some financials. And then it's the structuring. Do we want the business to own the policies? Do we want each of the business owners to own policies on the other individuals? And that's where, as advisors and with Roman and his team, we can talk through, the best structure for the individual and what that insurance policy should look like.
What is a 101-J form? I know that has to be filed at these times.
So most people are not aware of that term, 101J, right? I'll talk to CPAs and lawyers. 101J, when you buy insurance as part of a business, again, whether the business owns the insurance or even when individuals own insurance on each other, there is what we call notice and consent, and that's 101J. 101J is a notice and consent letter. And what that specifically means is that, let's say we're buying a key person policy on the business owner. So the business is buying the policy, the business is the owner and the beneficiary. In order to have that set up properly, and I'll explain what properly means in a second, we have a notice and a consent, a 101J letter that sits on the books of the business. And a lot of times I'll make sure it's also filed with the insurance company that says, the business has notified the business owner that they intend to buy insurance, and the business owner has given them consent. If that has not happened, and it's not something you can go back if you did a policy 4, 5, 10 years ago that you can now put this on file. If the IRS came in, it is very possible, and they have the right to tax that insurance versus making it a tax-free benefit. So that 101J letter is something very simple to implement, but can be worth a lot of money if it's not done. And as I said, I find more times than not, most people are just not familiar with it.
Eric, I know, and it is obvious that you've been at this for a while. In the review process, have industry standards changed as far as underwriting or carriers for that matter?
Yeah, actually, and I think it's accelerated over the last few years with COVID. Insurance companies were late adopters to technology, right? We were very paper-centric. A lot of forms had to be signed. And they were forced to update their compliance and their technology to come in today's, to today's world. So being able to utilize things like DocuSign and having clients sign electronically, which that was never allowed before. We actually needed a wet signature. Accelerated underwriting. People are used to having to do a medical exam to do life insurance. We're now getting to the point where, depending on the amount of life insurance, no medical exam is needed. There's enough information available to the insurance carriers for them to do their underwriting, that having somebody do an extra medical exam, which is an added cost actually to the insurance company, but also, to some clients, not the most pleasant experience. We're starting to see the need for medical exams shrink in terms of, what is needed and when it's needed.
Roman, I know in the planning process, insurance is important. What do you see in your field that many clients miss?
Yeah, the one thing is, as Eric sort of explained many of these different parts, insurance is complicated. And many people think they could just find a commercial and call for that $9.99 per month, whatever it may be, to have that term policy. As easy as that may sound, it's not necessarily the case, right? For us, it's more about sophisticated planning, and it's about having a conversation around insurance and the importance of it. And beyond that, it's having the right people to be on board, right? It's for us, we as advisors ultimately become really our client's chief financial officer, and we help them quarterback the overall process, right? It's a collaborative effort to bring everybody into the conversation. The one thing, or one of many things that we've noticed, is that there's a disconnect between what the attorney's thinking and then what the advisor's thinking and what the CPA or insurance person may be thinking, right? For us, ultimately, it's bringing everybody together, inclusive of the family, to make sure that everybody's on the same page. And when we're doing a review, it's not about the insurance that we're really selling a policy, but it's about finding solutions. It's about what has changed. How often do we look at this? And for the client, it's an understanding as to what we're doing and why we're doing it and the importance of it. So it's having that conversation, incorporating it with estate planning, and making sure we're modeling out with the tax savings strategies as well with the accountant, along with the tax laws that may have changed from the estate planning part of it as well. The other thing really briefly is many clients, when they go through these, as Eric said, life events, whether they have a child or whether they have a divorce, making sure your beneficiaries are up to date, right? Because look, we've all had those people that we know where all of a sudden they got divorced, and next thing you know, their ex is getting a check for $1 million because the person that passed away never changed the beneficiary. But they said, well, you know what? I changed the will or the trust. Not necessarily the case, as ultimately the beneficiaries on policies do dictate or supersede as to what the will or trust can say. So again, those are the finer things that we look at to make sure they're up to date.
Okay, I need to thank the both of you. This has been so informative, but I'm not letting you go yet. Any last points you'd like to make to put a bow on this presentation? Let's start with you, Eric.
Yeah, I mean, again, insurance is complicated, and a lot of people are confused by it. Our job, Roman and myself, is to try to really help simplify what insurance is and what it does, and really advise and guide clients to help them understand, again, as easily and as simply as possible, what they have or why we're recommending something, and not make it complicated.
And what about you, Roman? Last words, please.
Yeah, it's about having the right people, right team. A lot of what we're doing is educating and making sure that the people that we get involved understand fully as to what we're doing and why we're doing it. And having a partner like Eric and on the overall planning process, it helps us simplify and really, leverage the intellectual capital that's there. So we appreciate and value the relationship.
Well, I want to thank both of you, and I remind our listeners and our viewers, we were joined this afternoon by Managing Director and Partner at Hightower, Westchester, Roman Chosik, and Eric Wilson, the Managing Director and Partner from Nucleus Advisors. They work as part of Hightower. And I want to thank you both Have a great day. And I'm sure our viewers and listeners have learned a lot, because I know I have. Thank you so very much.
Thank you.
Have a great day.
Hightower Westchester is a group of investment professionals registered with Hightower Securities LLC, member FINRA and SIPC, and with Hightower Advisors LLC, a registered investment advisor with the SEC. Securities are offered through Hightower Securities LLC. Advisory services are offered through Hightower Advisors LLC. This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process or the investment opportunities referenced herein will be profitable. Past performance is not indicative of current or future performance and is not a guarantee. The investment opportunities referenced herein may not be suitable for all investors. All data and information referenced herein are from sources believed to be reliable. Any opinions, news, research, analyses, prices, or other information contained in this research is provided as a general market commentary. It does not constitute investment advice. Hightower Westchester and Hightower shall not in any way be liable for claims and make no expressed or implied representations or warranties as to the accuracy or completeness of the data and other information, or for statements or errors contained in or omissions from the obtained data and information referenced herein. The data and information are provided as of the date referenced. Such data and information are subject to change without notice. This podcast was created for informational purposes only. The opinions expressed are solely those of Hightower Westchester and do not represent those of Hightower Advisors LLC or any of its affiliates. Hightower Advisors do not provide tax or legal advice. This material was not intended or written to be used or presented to any entity as tax advice or tax information. Tax laws vary based on the client's individual circumstances and can change at any time without notice. Clients are urged to consult their tax or legal advisor before establishing a retirement plan.